Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having a great day, regardless of what's going on here. If we take a quick look, Trump is at it again, dropping the entire market by 2.7%, basically just stating that there is a 100% tariff on Chinese goods that is not sustainable. There's a lot of details we're going to go into here today, just regarding what happened there, but keep in mind, fundamental catalyst, for the win or for the loss, depending on how you look at it. Now, if you aren't part of the community, CryptoCache.tech is the site if you want to become a better trader. Join our Discord, of course, and or just become a better trader by watching the videos all the way through and liking them, of course, just as a courtesy to me. I appreciate you doing that. We're going to take a look at some backend data here, more specifically this macro structure, kind of just talk about worst case scenario. I'm not trying to scare you into the thoughts of sub 100,000, but that is potential reality for us, or at least more likely than not, we're going to see some range bound activity in this area that we're in right now, just based on the simple fact that generally when we break this little microstructure, we have common range bound activity before the next leg up. Okay. Now we are coming up on November, December. Those are historically good months. So I don't think we're totally in the doghouse just yet. But for the next 2 weeks until Trump and the president of China essentially figure things out, we're going to be in this chop salad situation. That's just the easy way to understand it. There are some larger, more macro CME gaps we're going to talk about as well, and obviously the imbalance here with stablecoin dominance shooting straight up, but Bitcoin dominance effectively going sideways and alts going down. So that's generally not a great sign, but there are some key things we want to kind of identify there. So this is all important stuff. Be sure to stick around. Let's go ahead and take a closer look. All right, folks, before we jump into the back end juicy liquidation data, let's double check a few important things, more specifically just touching on this fundamental catalyst. We don't really need to get into too much detail. It's pretty obvious what happened. As of late, we've noticed that U.S. markets have been going sideways and up, and for the most part, late at night, generally when we are sleeping here, at least here in the U.S., we're seeing these kind of crazy sell-offs occur in Asia. Okay, so for lack of better terms, China, U.S., there is a lot of problems here with trade wars. Essentially, just the bullet points are pretty straightforward. We're seeing 100% tariff on Chinese goods. Trump says that's not going to work for us. We're going to reconnect in 2 weeks. But he also mentioned too that we are in, quote unquote, in a trade war with China. And that doesn't really help the market feel so good, right? Most markets are going to pull back and take some profits, so to speak, because of that being uncertain, right? It's an uncertainty, and truth is that shakes a lot of larger traders out of the market. So that's kind of what we're seeing right now. So just a general normal thing. And if we take a look here at yesterday's poll from YouTube here, majority thought we were going to go lower, which makes perfect sense considering this fundamental catalyst, right? Now with fundamental catalyst aside, I don't really think we're going to go too much lower, honestly. We're in pretty good shape. We see a lot of sustainability in the current price range, just from previous price action. So we'll talk about that, of course, with the macro structure, not get too out of control or out of hand, but we will talk about best and worst case scenarios here. I do think that we're going to be fairly well range bound in the 100 to 110K range as a rough estimate, and I'll explain more so about what I mean on that here soon. There's no specific outliers on the order blocks here, basically telling us that we're still in good shape as far as up and down price action is concerned. There's no significant levels that we need to pay attention to there locally. But when it comes to the bigger picture, that's when we want to kind of focus on just more so better or worst case scenario. So let's talk about this here, just to kind of get this out of the way, because a lot of folks are like, I think at least my community keeps talking about other influencers mentioning 95,000 or 92,000, and the reason why that happens is because you're seeing it's an area of confluence. Okay, so just because it's there doesn't mean it's going to happen, but it does imply that that should be one of the local bottoms. Part of that is this 0.618 fib level at approximately 94,000, as low as 92.5. You could just round up or kind of average it out, 93,000 as a rough estimate if you kind of take the center point there. And that area there is just simply put a normal area of retracement where the price action, if it were to pull back and break its local low, which once more is about 100,000, then we're going to potentially see that mid to low 90K range. All right. It's also an area of confluence because there is a CME gap from back in April at about 91.5 upwards of 93,000. Okay, so you see that narrative there, that $93,000 consistency with fib levels and previous CME gaps that haven't been filled yet. Right now, I get the question a lot. How likely is it to see that gap get filled for the CME? And The truth is that the statistical rate of filling CME gaps is quite high. But once more, a lot of things happen. Like there's still a lot of CME gaps down in this 30,000 range back from last year, of course, that haven't been filled. So we're going to bridge that gap if we lose 100,000, right? Between now and then, if we look at kind of historical values, this is the 3-day time frame, just so you know, on Bitcoin. We look back here. Generally speaking, when we cross this center line on the Gaussian channel or Gaussian channel, say it however you will, the conversation here is that we're generally seeing about 2 months worth of consolidation in that range, right? Same thing happened here as well. When we saw back in March through April as a rough estimate, we saw the price action break below this trend line here. Everybody's scared. They start shaking. The whales shook a lot of people out there, and then the price turned up to rally back both times. If we take a look at just kind of like some numbers here, just from the lowest point in that trend to the highest point, we saw a good 120% return from that 50,000 roughly to about 110,000. All right. Now, a very similar scenario here, of course, diminished as well, but still pretty good. About a 70% return from the lowest point to the highest point. Now, it's not to say we're at the lowest point yet, but hypothetically, if this trend continues, which we've seen this trend fairly consistent over the last 1.5 to 2 years, then there's a good chance that we're going to be bottoming out in the relative, just say super rough estimate, $90,000 to $110,000 range, and then the price should leg up to that next area. And if we were to take a percentage here, just say hypothetically we bottom out at 100,000, that would put us in the 150s as a rough estimate for a similar type of progression to the recent increase in value. So just once more, strictly hypothetical here for these situations. None of this really truly always comes to fruition, but yet these patterns do have a tendency of repeating themselves. So the reason why these patterns happen over and over again, by the way, it's because there's a psychological component. A lot of folks, if you haven't studied the psychological, the psychology of human beings just in general, and also when it comes to money, it's one of these situations where people start to get scared, and it's right when people get scared the most that the price action will inevitably return fire. So generally speaking, we're probably in the early phases of this continuation to the side. I don't think we're going to go tremendously lower. Sure, yeah, loose estimate 90,000 would be a worst case scenario, but that would be a good consideration to start averaging in. All right, just kind of just thinking out loud here if that were to come to pass. So between now and 100,000, now and 90,000, those are areas in which we maybe want to consider consolidating. Or sorry, as the price consolidates in that range, that's where we want to consider dollar cost averaging, right? Because we can get that 1.5x or that 2x essentially to the upside, depending on obviously the coins you're trading. So anyways, all theory aside, let's look at what's tangible here. And when we see stablecoin dominance increasing, altcoin dominance decreasing, it seems pretty obvious that money's flowing away from altcoins going into stablecoin, because it's not going into Bitcoin there, because Bitcoin dominance is essentially going sideways. So that kind of tells us in a good way that money is available, but nobody's wanting to buy. And why do you think that? Because there's trade wars and there's a lot of uncertainty in the market. So that's just kind of the way that it goes. So you want to kind of prepare yourself, I would say, for it. At the very least, 2 more weeks of garbage trading, but worst case scenario, 2 more months of range-bound trading. Now, do I think that's going to happen? Because 2 months from now, that would put us, during the holiday season. Generally speaking, December, January, November, those are typically some pretty decent months. So I really think this is going to be abbreviated. Once things are alleviated with the trade wars, we're going to see that push up. So it'll be very interesting to see what happens here in 2 weeks. So taking a look here at liquidation. Last 24 hours, let's quickly get a refresh here. We are pretty much in the middle of a range, right? So upwards of 106.5 is the higher point, and 104.5 is the lower point. So nothing super amazing there. This is just total trash market. There's no other way around it. Can't sugarcoat it. This is not awesome. But we also don't want to get too down on the dumps either, because the truth is that this is very common par for the course in crypto and trading in general. These kind of things totally happen, and unfortunately, they generally happen when you're sleeping, which is awesome to wake up to a trade that actually got invalidated. I planned to close it early, but didn't, and of course, stop loss triggered. So that happens sometimes, folks. You got to be okay with it. Granted, that was a super low margin trade, and the concept here is that if you're going to take longs, you want to make sure to watch them close. Don't just set it and forget it. Okay, easy to say, harder to do. Now take a look here. at Bitcoin, 3-to-1 ratio in liquidated versus shorts. Roughly the same for Ethereum and similar-ish. Actually, no, Solana has a little bit larger of liquidation there because a lot of folks are jumping in the 180s. Now, the reason why this is relevant is because we see here there's a significant disparity for longs versus shorts for the others, and that's basically the sub 100 market cap coins. They are struggling the worst. So when you do see this this alt season index, this is reflecting once more the top 100 coins, but also you got to recognize those sub 100 coins are getting hit the hardest. So there's this isn't great, and as I mentioned previously, being under this $1.5 trillion mark is generally unfavorable. So we are in a position right now where we could very well continue to see a further downside for altcoins because they pulled back about 2x of Bitcoin on average, and they're rallying back with like half x of Bitcoin or 1-to-1 with Bitcoin. So when the pullback is twice as hard as the increase, that implies you probably should be more so stacking shorts versus taking longs. It's really the bottom line. So that's kind of the concept there. Okay, so let's take a look at the backend data, kind of see where we're at and double check a few things here. So when we look at the charts, these unrealistic areas have been mostly swept. So we got 2/3 of these high volume liquidation levels here that have been hit in the recent past. And those shouldn't have been hit right away, but of course they did based on what happened in the news. And then when we take a look at that and we recognize this, top traders are just increasing their margin. They're taking way more shorts than longs. It's inherently more risky to consider longs at this point. Okay, that's a simple way to understand it. Let's go ahead and double check the backend data here with open interest, and nothing's really changed here. There's no real massive areas of open interest locally here. 106 maybe a little bit, but specifically the 112 to 115K range is that area above. So it doesn't really tell us much, but it does imply that that would be the next consideration for, take profit if you were to take a long. That's actually a very, very high risk long. I wouldn't recommend that because we're in a descending trend. Until we break this descending trend line, folks, there's no reason to consider, basically a long position, at least with Bitcoin, or if you do take it, once again, tighter margins. That's a simple way to understand it. So when we look here at liquidation delta, we're at now 20 billion in the red. So there's 20 billion more in short liquidation than longs, basically implying that shorts are in play. And then when we look at liquidation, damn near everything has been fully swept outside of this 101 to 99K range. There's little chunks down there left remaining, but those are folks feeling like we're not going to see 100,000 in the near future, which I kind of side with in a sense, but you never truly know because this fear market, folks, it can be very toxic and it can consistently keep flushing out, any late long traders. Okay. So when I see situations like this, I generally like to steer clear of just trading in general. Even though I think there's tremendous amount of opportunity for short positions, which I may consider some if we see some significant bounces here soon. Which actually we're going to try to identify those areas here in a minute. But I think just a good rule of thumb in these situations is just kind of be a passive trader, hang out on the sidelines, wait for the market to kind of stabilize. We might not see that this weekend. It's just kind of the easy way to understand it. So daily time frame, we can see the most amount of control here if we kind of, we're zoomed out here, so to speak. Ever since we've been in the $100,000+ range, we can see the most amount of volume at 96,000. There's some confluence there. But obviously, if we zoom in a little bit, we're going to see the volumes, basically appear to be a lot larger at 105,000 and 111,000. Okay, so we got some, 96, 105, and 111. Those are three heavy areas of concentration for volume. So we're kind of right in the middle of that. Therefore, emphasizing, 95 to 110,000 is maybe that range that we're going to be stuck within based on volume being the highest in those levels. So that's just an observation. But volume does have a tendency of being a pretty good indicator. When we look at the 4-hour time frame, we're going to double check this here, but there's nothing that's super amazing, nothing that's hidden. It's pretty obvious that we are in a descending trend. We've broken below 30 on the RSI, which is generally construed as an overextension. So it doesn't mean you want to buy now. It just implies that with us being underneath that level, we want to wait for the price action to recover back up above before considering a long. That's kind of the concept. Or before you consider securing profits on a short. So if you're in a short position right now, it makes a lot more sense to keep it open because there's good momentum and we're past that threshold of comfortability. All right. So those are kind of things that I like to look for. But what are your thoughts? Why don't you do me a favor, comment below, let let me know where you're at in your Bitcoin trades. Are you trading Bitcoin, or do you care less about it and you just trade alts only? I'd love to hear it. And try to stay positive, folks. Honestly, this kind of market, I'm trying to normalize it because it is very common and very natural for us to see these kind of corrections. So it's not the greatest, and it is pretty obnoxious when these things happen based on things that we can't control. But that's the whole market for you. It's literally a series of uncontrollable events. So what you can control is your emotions, and obviously how much you trade, how much leverage you use. Keep your margins lower in these situations, unless of course you're shorting. That's a different story. But most people do kind of default to taking longs, which is generally safer in a overall, because there is no just the way that the market works. Shorts are inherently more risky. So if you just want to avoid that risk altogether, consider waiting on the sidelines for a few days here. Let the waters calm down, and we'll get there, folks. Okay, try not to be in any rush. All right, hope that makes sense. I described it correctly. Let's take a look at some altcoins next. Quick heads up to our traders, make sure you take full advantage of this Uptober sale here, or rephrase to as our Dumptober sale. Sale ends October 31st. Just want to make sure you're aware there's only a few slots left remaining for our permanent access, and there's also monthly options as well. CryptoCache Premium, day trades, swing trades, and trade setups are all included here, and those are provided to you through Telegram or Discord. Feel free to message me below if you have any questions, of course, but I do recommend you direct message me before, so we can make sure that you have any questions, we field that together. All right, folks, go and take a quick look here at Ethereum, kind of see what's going on, get the baseline of the backend data here, because when we look at this yesterday, there were some significant resistances above us. Let's see if there's anything that may have changed here with open interest. We're going to see 3,900 and approximately 3,970 is at those two heavy areas there. So if we do end up pushing back and rallying back, I think it's safe to say that that $3,900 to $4,000 range is going to work as a resistance for us. The liquidation delta has shifted bearish here, of course. We're at about 10 billion in the red. If we look at liquidation, majority of that liquidation has been fully swept. The big chunks there at about 37.40, and the price rallying back as if it never happened. So this is a pretty common occurrence here, folks. Once again, fundamental catalyst causing this to happen, but those chunks of liquidation are so often sought after. It's ridiculous how fast things move. So new areas of liquidation is 35.60. That's about a $3 billion chunk there. But generally speaking, we're looking at still a decent amount of liquidation left to the downside here on this coin. Now, taking a look at the back end, understanding that foundation is good, but we want to also kind of look at the charts here and just quickly recognize some potential key levels here for us regarding, the previous lows and just generally what that looks like. So I always like to kind of draw this out to give us some perspective on previous areas, because those are oftentimes either retested or just holding as potential support levels. So just something to kind of be mindful of. We got a low of 3,400. That is the previous low here before the price ran up to that $5,000 all-time high. So that's kind of a concept there, but we are still honoring our descending trend line here, even though it's very ugly and not the cleanest. We can see this lower low pattern still holding. So until we break below that, we want to presume that we're going to continue to hold this range. So if you look at the volume, we want to double check this here, 3,650 to 3,800. There's a lot of volume in this current range right now. So good news is we're kind of in the support range based on previous highs working as potential new lows, right? So that's kind of the concept there. But really, when you look at everything else, there's never really been any type of bullish convergence on the daily time frame. We're a long ways away from that. So at this point, it's kind of best to get in your head that we're still in a descending trend, and we want to presume this trend will continue until it doesn't, right? So we just got to kind of presume that this lower high, lower low pattern will not stop. All right, that's kind of where we're at there. So taking a look here at the 4-hour time frame, just kind of giving some perspective. I'm just drawing some trend lines out here for future reference. We've wicked down to this level of about 3,700 3 times now. So hypothetically, that could be our local bottom. Now, when we look at the overall sentiment here on the 4-hour time frame, we can recognize that this divergence is quite significant. Money flow index is now below the RSI. So that shows strength and continuation potential to the downside. We also have a triple stochastic swing, which is false positive, of course, at this point. So honestly, none of this stuff really truly matters too much as long as we're still in these trade wars. Okay, so the best way to understand it here is that we're in a descending trend. This is a triangle type of pattern. They generally do break to the downside because we're retesting this lower lows consistently. All right. So hypothetically, we would get one more little leg up. That would be probably a better consideration to short that $3,800 to $3,900 range versus trying to take a long now. That's just kind of inherently too much risk involved with the long position at this point. Okay. So that's kind of where we're at there for Ethereum. Why don't you let me know your thoughts? Comment below if you're trading this coin. If you're looking for a new exchange or possibly just want to help support the channel, Bitunix has got you covered. We've been partnered with this exchange for over 2 years. It's been our fan favorite for our community, and the reason why is because they take really good care of you. They offer trading reward bonuses as well as a reduction in fees. Best exchange I would recommend at this point. Link down below for more information. All right, let's move on to Solana, see where we're at. Solana's exuding very similar behaviors, only its pullback and its swing down was tremendously stronger. So at this point here, 177 is that level that we cannot, or sorry, not that we cannot, but if you look, we close below that level, we're going to be in a position right now where we're going to be establishing lower lows. That's generally not a favorable sign. That doesn't show strength versus Bitcoin. Okay, so truth is, probably best not to trade this coin, but we're going to do our due diligence and double check the backend data here and see if there's anything that might be helpful. We just want to identify 185 and 198 are the new potential resistances for us now that we've broken below those thresholds. We spent some time at 185, which was supposed to work as a support. It didn't, based on the simple fact, again, fundamental catalyst. So that level should have and could have held, but with that just significant selling pressure of traditional markets and Asian markets, that there's no way for that level to sustain. So we got to treat it like a new resistance now at this point. We're at 2 billion in the red versus 4 billion in the green from this time yesterday. So things have certainly shifted momentum. And at this point here, even though all liquidation has been fully swept, I wouldn't be surprised if we continue lower. It's just kind of one of those things here. So let's double check some macro stuff just to kind of see if there's anything that might be helpful for us to identify as far as local bottoms or tops, and just kind of recognizing certain things here. So when we look at our previous lows, 156, that was the previous low before the price took off. So hypothetically, if we go down to the 150s, that would be a consideration for entry. Now, at this point, I think it's kind of far-fetched to expect that to happen. But if this bleed out continues to occur, we see money flowing away from ETFs, then I think there's a good chance we'll see this here just based on, this being a super fearish market. Now, I try not to buy into the fear, or sorry, actually, I like to buy the fear and sell the greed. So the concept here is that, try not to psychologically, shake yourself out of all trades because we're going down. And the truth is, even though I'm giving you this perspective of the larger timeframes, you shouldn't, attach yourself to the bias that we're going to be hitting those levels. Just know if we do hit that range, that may be a good consideration. And again, when it comes to risk management, there's a lot of different factors involved. It really depends on the kind of trader that you are. So when we look at all these things here, these levels are important to kind of recognize as kind of a guide. It shouldn't be, set in stone per se, right? But as we can see though, volume is increasing pretty heavily as the price continues to drop. So it does imply more sustainability in the current range. So this coin is viewed as a good value right now because it's magnificently oversold. So that's kind of the concept there. But most coins are hitting this 7 on TD sequential, and we've previously hit 9s and recovered pretty well. So I think we're in a position where in the next 8 hours or so, once traditional markets close, I'm not proposing we're going to see a pump at all from Asian markets, but I can say that this weekend would be a prime time for market makers to pump the price action now that everybody's scared to death, right? That's just kind of how it works. So just be ready for some type of recovery here, but is it sustainable in the big picture? Probably not until the trade wars subside. That's just a simple way to understand it. So between now and then, just trade very carefully. Quick heads up to our traders, make sure you take full advantage of our Dumptober sale going on until the end of the month. We have a few slots left remaining. Our most popular feature here is our permanent access. Make sure you take advantage of this, of course, if you want monthly subscriptions as well. That's also a good feature for you. But the main concept here is that you're provided with swing trades, day trades, and my trade setups to let you know specifically why I take the trades that I take in the first place. Everything is explained, as well as a trading university too. Be sure to check it out. If you have any questions, comment below, or more importantly, just reach out to me direct with the contact information in the comments. All right, let's take a look here at SUI, see what's going on, as we can pretty quickly and easily identify this local bottom has been broken at 245. We're now in the 237 range. So this coin is looking pretty abysmal, just kind of from the bird's eye view. And comparing this coin with Bitcoin, I'm willing to guess it's going to look very, very similar in a lot of ways. As you can see, establishing lower highs and lower lows. not quite as aggressive as Bitcoin, but still absolutely losing its local bottom. So not a good look here for SUI. All right, so let's go ahead and take a quick peek at the back end, see if there's anything that's indicative here. And at this point, not a whole heck of a lot really going on. 270 to 280 is at resistance, which wasn't even close to being retested here recently, where our liquidation short delta is pretty high. And this coin, unlike other coins, has a tremendous amount of liquidation below the price. So these are all high leverage longs that didn't secure profits when the price wicked down. Imagine getting in at like 150 or $2 and being up like a significant margin and being too greedy to take profits. And now half of your profits are gone. That's why you got to secure profits when you can, folks. This market doesn't allow for moon boys or for anything to go to the stratosphere. I can't think of any good analogies right now, but I can tell you that holding on for too long is going to get you absolutely destroyed. So secure profits when you can. That's the concept. And once more, $2 to 220, heavy area of liquidation on the downside. So now that we've broken that local low, we're gonna see this coin probably continue to precipitate lower. Now keep in mind, we are hitting an overextended state, so the probability of a slight relief rally is definitely there. But if we just say the price action recovers for the next 7 to 10 hours and just kind of hangs out in this 245 range and can't seem to pass it, then we're probably going to see the price continue lower because that was a previous closure, basically an important level for us at 245. So let's take a look at the daily time frame. See if there might be any potential significant areas here to consider. Because if we look here, previous bottom, that's that 245 level, totally, well, not 100%. We haven't totally lost it yet, but the truth is we're trending towards closing below that level, and that does increase the odds of further downside. So that kind of puts us in a position where if we look at our previous daily closure, 192, that's our next worst case scenario, okay? So 192 would be the worst case, and unfortunately, that matches up pretty well with these liquidation levels here. Look at that, 190 is right there at the bottom of all that liquidation. So I wouldn't be surprised if we see the sub $2 range here for SUI, honestly, just based on the way things are working out and how poorly it's paired with Bitcoin. The amount of selling pressure in this coin is just ridiculous. Like when Bitcoin pulls back, it's like probably 3 or 4x of Bitcoin versus only 1 to 2x for most other altcoins. Okay, so not good. So again, not slamming this coin, just saying it's not really worth taking along. You're better off waiting for some better price points. And to tell you to take along at any given point right now is a bad idea. Obviously, 192 would probably be a good call at that point if we see it, just because the likelihood of bottoming out by then is pretty high. But once more, it's not really a good market here to consider taking any long. So that's kind of the concept there. There's nothing that's super amazing on the 4-hour time frame. I'm not going to try to sugarcoat it and let you know that we're going to be bouncing from here. While we could and probably should, because we do have a massive overextension on RSI and money flow index, these are two common areas that I see on the 4-hour time frame that usually lead to a short-term reversal. Outside of that little caveat there's too much wrong in the world right now to allow or to just to try to take a trade with this coin, at least to the upside. So I would say leaning a little bit more towards a short if we see 245 to 250 or not closing above that 245 range for starters on the 24-hour period. Okay, those are things I'm looking for. What are your thoughts? Comment below. Let me know. Are you long or short on SUI? All right, let's look at XRP and quickly double check something here for us. We'll go ahead and go with our due diligence, but as I've mentioned previously, this coin is looking absolutely abysmal. It's responding quite poorly versus that of Bitcoin, and just kind of knee-jerk reactioning down. So once more, moon boys are probably probably loving this price point right now, telling everyone to buy, but you probably are better off waiting. Now, let's just quickly double check though, just in general, because this coin, just because it pulls back hard with Bitcoin doesn't mean it can't recover. It recovers quite quickly. So for the most part, this coin does tend to pump and dump, for lack of better terms. But if we look at the overall sense, 240 is that macro open interest range here, at least within the last week's worth of trading. I wouldn't say that's macro, but 240 has been a consistent number we've talked about in the past. And then we look here, liquidation delta is at about 1.5 billion. That's fairly well overextended. So it does imply that potential reversal is probable, just based on the fact that we have an imbalance there of liquidation. That's quite a lot. And if we look at the last 7 days, every last ounce of liquidation has been fully swept. So market makers, Good job. You did very well. We take a look here though. There's some late longs, of course, as per usual in the 220 range there with liquidation events there. And we take a look at the price action here too. Keep in mind this is the Binance exchange, so we're going to see some really aggressive, ugly candle wicks. But for the most part, once more, that 255 to 245 range is that resistance for us, partially because, once more, 240 is that point of control with the heavy amount of volume. So if we do see a rally back to 240 on XRP, which actually we are we're close to that right now, then we're more likely to see a rejection in that area. So 240 to 255 seems like a very optimal place to consider a short position. Obviously, lots going to change between now and then, so take that with a grain of salt, but that's kind of the concept there. We are down below some key level ranges, so we want to be mindful that this is the resistance range for us, and we want to trade with caution. You don't take a bunch of longs leading into that resistance. Looking at the daily time frame though, we want to understand here that the overall sense is that we're below a lot of resistances. There's nothing that's super or even remotely bullish. We're just mega bearish here on this coin. And then we look at the 4-hour time frame, very similar to SUI. In other words, broke its local low and is essentially precipitating lower. While it's probably a bad idea to consider shorting right now, I think a short in the near future, if we see a bearish backtest at 240 or possibly 255, that range there seems like an optimal place. So I wouldn't be surprised if we see something like this here and then right back down again as soon as we get our next Trump tweet, right? That's kind of the concept. That's how the market's been moving and be performing. So be very careful trading this coin, even though it's probably your favorite coin or could be one of yours. Remove emotions from the equation here, folks. All right, this isn't something that you can I struggle with analogies when it comes to people who attach themselves to specific coins because it's their favorite, and some other influencer idiots telling you that you should buy it because of 20,000 different legal ramifications where the U.S. is going to adopt this coin as its primary tether. Just all that stuff is crazy to me. So once more, fundamentally, sure, you might get lucky in that sense, but it doesn't mean you put your entire life savings in this coin. Diversify, play it smart, stop being an emotional idiot, and you're going to trade a lot better. Okay. Now, once more, trading is not a one size fits all. So in this situation here, there's a great chance that we will see a short-term relief rally. So please understand that if you're trading with too much emotion, you're probably going to get fairly well destroyed and probably have already been destroyed. That's probably why this hurts for you to hear me say it, but it has to be said. And I just hope that you trade more carefully moving forward. Now, am I perfect? No. We got stopped out on our ETH long here recently. And even though I said not to take any longs, it was a high risk trade. We were super, super close to our profit target, and the price turned around overnight. So that's how trading works, folks. Make sure you just get used to it, and you're going to be much better off with that. So anyways, those are kind of just those are things that I'm telling you that are from my heart to yours, telling you that, hey, if you're struggling and you're having difficulty trading, sometimes taking a little bit of a break or perhaps just turning off all the noise might be a good consideration. Anyways, those are conversations for another day. Sorry, that's just total sidebar. But that is XRP in a nutshell. Not worth trading at this point, even though I think it's probable we'll see a relief rally soon. Most coins are massively overextended. There's no guarantees on that right now. Okay, market's shooken up, and we got to wait a little bit before we see it kind of calm down a little bit. Right. And by then, all the opportunity will be gone. We'll have a handful of new opportunities. Whoop-de-doo. So what? You missed it. You missed a trade. All right. All good. Don't worry about it. Have a good rest of your day, though. Make sure you do that. Spend some time with your family, friends, pet your dogs, cats, whatever animals you have, and just find a good way to be positive. Okay. It's all good. We'll get through this. Have a good rest of your day. We'll see you in the next one. Take care.